Well, we have bank runs at Credit Suisse. Even though I'm here right now and it doesn't look like anyone's running around.
Bravo, that's not Credit Suisse. And why the hell am I wearing my son's hoodie?
Well, Karen, if you could do me a big favor and push the button with the right one, that would be good. It's to the left. There. Hell, we're in Bank of America now. And here, cue the fire. Look, everyone's gone. See? Credit Suisse. And now some of you are like, Bravo, show me that the article says bank runs, and I will show you are a liar, son, and I will tell you nothing on this channel is a lie, except for the channel. Credit Suisse craters after staggering, this is the news article, bank run. Dump, and I'm going to show it to you in the charts. And warning of continued losses. And my apologies if I have a pep in my step this morning. Woo! And this is breaking news coming out of Bloomberg, because they write it all over. I'm in the Credit Suisse's studio right now. That's the CEO. If you ever want to hear the most boring, computerized, AI-generated human, listen to the CEO. Oh my goodness. I tried. Look at those facial expressions. Credit Suisse trading collapses. But it's okay, I got you out early. As global ambitions fade. Also, talking about trades, I have a good one for you. Now I feel like Dan, I have a good one for you today. Is that what it is? It should be Dan. You got to be like, I got a terrible one for you today. All hell's broke loose, find a hole and cover yourself with a boulder. But there is no shade thrown. I love every YouTuber except for that one. But here it is, bank runs and warnings. And I'm going to show you something. And you're going to go, okay, that's a run. Okay, so look at the chart above my head. This is from Bloomberg. This is mammoth outflows. And you're like, that looks fine. New money, credit sees historic level of clients pulling out. Should have listened to that one. Could have saved me a lot in car insurance. But looking at this is going back to 2013, 14, 15, 16, 17, 18, 19. Okay, is it bad? Is that bad? How about that one? Is that one bad? When was that? That was recently, over the last 2 years ago, when everyone's like, oh my gosh, get your money out of the bank. You want to see what they're doing now? And we're almost there. There it is. And it's gone. You guys have literally just wiped him out. What's he going to do now? Go on talk shows? I mean, I wouldn't be the first one to watch this guy. Okay, I'll give you 1 second of his voice. Hold on. Here.
And then we get better and better.
What's your outlook for asset flows?
That is not the face of getting better and better. And also, when it comes to Credit Suisse, I wonder if the stock could have predicted this so far in advance. The answer is yes, and we're going to search. But before I do, okay, let's see. What was it? You're waiting on that nat gas? I can guarantee you that 1.1% is still not the time to get in. Just to let you know, Monday? I don't know. Monday, I think I closed my position on that SPY. I'm waiting. It's at the top. We're going to roll. I'll be back in. You just wait. And towards the middle end of the video, I've been tracking a stock for about 3 weeks, and I got really excited, and it was in a wedge, and it started to break, and I'm like, please let me do the video. So now I get to do the sponsored video towards the middle end. You're going to want to watch the stock. This thing's going to be very interesting. And also, no, I do not buy it. I cannot buy it. I cannot hold it, hodl it, nothing. I wish I could have. I can't. Sometimes I almost don't want to take these, when they're like, hey, we'll pay for a sponsored, and I'm like, no, it's cool, but thanks for the ticker. I appreciate it, but I'm coming on. I actually had looked like you had a little double bottom right there on Credit Suisse, but under the 200 means we're going in the wrong direction. Also on this one, when everyone took all their money out and you've lost, I don't know, maybe a third in their stock, well, the little E says exit prior to earnings, which the last time you probably should have listened to Johnny Bravo's advice, especially in a bear market. How much did you lose? Exit prior to earnings, I could have saved you. How much on car insurance? Oh, come on, kids, almost 22%. You didn't learn the first time, so you got the second time? How much was it today? Today, since I'm going peak to trough from yesterday down about 16%. And I know some of you are like, well, this is the time to buy at all-time lows. And I don't trade that way, my friend, because very quickly your low ends up was an all-time high, which all you greedy little kids on Nat Gas are like, oh my gosh, look, it's down 80%. I'm like, it could go down 90. It could go down 100. Like, it's not time to get in. And you, in the comments section, you're like, I'm going to catch the falling knife. You probably at the ER right now. And also, thank you so much for all the comments in the comment section where you're like, you've made me so much paper trading money. Thank you, bravo, ever since I subscribed to your channel. Oh, hey, maybe the button's right there. It's on your side. I can't push it for you. Although Google can unpush it. Google oftentimes unsubscribes you. You may want to take a look. It does it all the time. You guys actually send me emails. They're like, they unsubscribe me every week. As if I'm not going to find the letter J space Bravo wife. That if you Google it, that's what always comes up. I'm like, oh, just look, you meet someone. I'm like, just the letter J, B. And then they're like, who's J Bravo wife? Yeah, I'm like, that's all the creepy people that follow me on the tubes. But anyways, back to Credit Suisse posts. Look at this. Remember 2008? But we have the strongest job reports. I also have another article. It'll tell you it's like the weakest, but whatever. Just keep listening to whatever Joey B says, and however the government makes everyone say what. But you could go out in the street and go like, okay, this is not good. Credit Suisse posts biggest annual loss since 2008, and I say that is not good on this channel. That's the one thing in the comments section. I don't ever want to hear that. Oh, that's actually one thing I've heard. Because I listened to you and I stayed out of the market or whatever, which I'm not. I'm always in the market. I could have made so much money in XYZ. Bitcoin or Doge went up 10%. I could have. Yeah, well, tell me when you were at 70,000 and then it drops to 15,000. Hey, how much you making? Or when these altcoins that the government is going after. I'm telling you this. If you can stake it, they're coming for you. If it has a CEO, Ethereum, they're coming for you. Now you know why I have a crypto course, and I know crypto. I've been trading it forever. And I'm kind of a maximalist on the Bitcoin. So just to let you know, I know, go ahead, throw all the heat down you want in the comment section. It's okay. You'll see in the end. But today, the Dow, look at all this. The S&P selling off. That's not bad. That's just 0.5%. I do think we are getting ready for that MACD to roll. We're going to have a downside. I just don't want to be a part of that. If you want to, again, hey, I have a bear market course. You can make money going down when the MACD crosses. And that would look something like, let me move this over just a tad so you can see it so my little finger can get on it. That would be Bitcoin when that crossed. But Bitcoin's like, no, we're still going to keep going higher. Okay. You can only fight so long, Bitcoin, and then your corn gets popped, and there's your 200, which it's probably going to come on down. That would be 19K, just FYI. Boy, have we just not, that's the thing about being a trader. You have to wait and have patience. If you don't have patience, don't be a trader. Or do my watch list, and I give you new stocks in the bear market, new stocks in the above the 200, swing trade up. UNG, I told you, that, see, when they cross, well, actually, no, that was a swing trade. Skip that. That's ugly. Which I actually would use a different oscillator when it gets into that point, but I'm not even going to talk about it. But on your swing trade, you still have to wait. Look, one candle on the daily, one candle close above the red line. You're not there yet. You're like, but we've been waiting since December. I know. Then there's other things to trade, my friend. Also, if you're interested in swing trading, that's where I always have my high school students start, and we're like, okay, this is how it goes. Start there. What are we at? 36, 70, 70% off? Yes, $300 for that. All my courses, actually, and they're all going to 400. Because there's no way. That's so cheap. You're like, oh, it's probably not even worth it. And also, before I forget, Miguel, happy 50th. Congratulations. Hope you look sexy. Credit Suisse posts massive. Is that crazy? It's so bad. But you knew, right? Or are people just like stupid and Yep. Let's go with B. Just wish people would take some of my brain. You don't want all of it. Just make life so much easier. And the CEO did say that this is completely unacceptable. Well, then go buy back your stock or something. Which, if you're ever wondering why they do that and why CEOs get paid in stock, it's because the government's like, oh, you guys are making too much money as CEOs. So CEOs are like, okay, then don't pay us. We'll just take it in stock. And then they manipulate their stock. You see, free market always finds a way around government. And the smarter you are, you can then find ways around. Well, as long as it's legal, though. But traders are starting to put big money on the Fed going to 6%. I want to talk about that. I'd also like to talk about market being spooked by large S&P put. That's someone betting that the S&P 500 is going to go down. So what happens is the VIXY spikes. So when all retail is like, yeah, it's going to the moon. You said it was going to go down. I'm like, no, wait. 3, 2, 1, go. And then I make money going up and I make money going down. I get articles from you guys like this, which it's true, but it's okay. The stock market is a drunken psycho. I think Warren Buffett said that, not today. He said this before. Why this hedge fund manager is shorting some of the biggest stocks. Exactly. But you want to know? I don't even have to read this article. I could scroll down and I could read it, but I'll do it when the indicators say click button. It also has nothing to do with the Fed. I know you could look back macro and see the market always front runs the Fed. That's your fault. I just look at the stock market, just a beauty pageant. Pretty girls turn into ugly girls. Guys just bet on money. Well, also ladies too, that, they're going to get ugly after time. And in time, they're right. But for some reason, we have so many people that just want to hodl the beauty pageant. I'm like, you're probably going to lose. Also, no one understands the Fed. And then I try to explain it to you in under 10 seconds. Here, watch. The Fed's fund rate, what is it? Really means nothing. But for some reason, everyone's so excited. They're like, if the Fed does this. No, Fed funds rate. That is what the banks can lend to one another or loan to one another. How much of a point does that even make? None. It's a mute point or a moot point. Stupidest. Well, there's more stupider words, but it doesn't matter because there is no reserve requirements. Look it up. I'm too lazy to look. Okay, I'll look. Here, I did it for you. I'm like your Google. Announced in 2020, Board of Reserves 0%. Okay, you don't even need to have a reserve requirement, so they can borrow from one another. Doesn't matter. So whether or not the Fed raises rates or lowers rates, the banks don't give a frack. But you want to know what they give a frack to is the bond market. That's what controls interest rates. As the Fed's tightening and interest rate, everyone thinks it's like a lever. Oh, the Fed's going to raise the interest rates and they keep going down. And then everyone's like, well, I don't know how this really works. Well, that's because you don't. Leave it to the dumb experts that do YouTube, not the 400 PhDs over at the Fed. And they'll just come out anyways and lie to you, when they're like, yeah, essentially we print money. No, you don't. Actually, I just found an article that you guys are almost getting it. Why don't we just replace the Fed with the 2-year Treasury? And I say, you're almost getting there, Chuck. Or Ryan, founder of Third Line Financial Planning. And then looking at his bold points, because I have ADHD, I can't read. What's the fuss about? Nothing. Okay, the Fed's manipulated the price of money. No, it has. It tries. It tells you they do. They're like, oh, look, we're going to print money. No, they don't. Looking back on history, the Fed usually gets it wrong. That would be correct. That's why I have stories like this. The spread between the 2 and 10-year yield is on pace for its deepest inversion since October 1981. Yes, enjoy your Great Depression. Thanks to whatever people, what they think. Even with all the pomp and circumstances of the well-telegraphed meeting, which it is, it turns out that the Fed historically follows the 2-year Treasury note anyways. That is correct. And I've been saying it on this channel forever. They are not in control of interest rates. They just follow the 2-year. And usually when they come together, converge and diverge, that's when Jerome's like, or whoever, Janet or whoever's wearing the hat, they're like, okay, I think we got to change course. So now banks, okay, you know how you're not lending to one another and there's no reserve requirements? It doesn't have to be so much. But just about everything coming out of any news source is usually a lie and just do the opposite. Like when Biden's like, the economy's strong as hell and we have record, right? Flush it. Total U.S. jobless claims. I told you this, near 1-year high. I say that's cool and all, but how can I make money from it? That's it. And I'm like, okay, how can I make money from the jobless claims? I can't, but I can make money from charts. So why not do that? Also, this was the sponsor that I wanted to show you guys about weeks ago. That's better late than never, right? And they actually handle a word that I can't talk about. It starts with a C. You know what I'm talking about, right? Let's imagine if there was a cure for it, things like that. No, I don't want to subscribe to your newsletter, but thank you. And this company is on it, which also they are saying could future FDA, sorry, in the business world, we sign a lot of those. Could the news justify a potential 1,299% climb back to its 52-year and blah? I say, look at the charts. Also, in regards to looking at a chart, I'm going to give you a little macro to put in your pocket. Extremely low float, 3.9 million shares. That's it. And this is a NASDAQ company. And people go every day, will you do a sponsored video on something? Nope. NASDAQ, you got it. But that is only if the charts work. Otherwise, no bueno. And significant upside potential. They're saying they're a 52-week high of 4. Just remember 420. It's 424. Now, looking at the chart, it's a ticker symbol HILS. This, see this blue line, red line? Support and resistance. That's a descending triangle. And I saw that. Now, again, remember that price target that they gave. And I was like, oh goodness. Okay, let's do this. Let's play the game. Hey, 80% of the way through, right? A descending triangle that breaks to the upside. That's your 200-day moving average. By the way, you put in a buy right there, which I knew they wanted to be a sponsor of the channel. And I'm like, oh, do I take the sponsor or do I just trade this thing? I took the sponsor, so just to let you guys know. So you put in a buy and see where are we going? Should you hold it? Yeah, I think you should hold it. Oh, hey, look, the 200-day moving average does affect. And congratulations, Hillstream Biopharma, for getting over it. Congratulations. Also, congratulations on the things that you print out that you're like, this is what's happening. These are the probabilities. How much did it go up? Well, 212%. That's why Bravo was kicking himself when he took the sponsorship. Or let me rephrase that I didn't take it. Also, note to traders, you cannot trade this unless you know what the frack you're doing. You have to know why you get in and why you got out or when you're gonna get out. So like always, not financial advice. It can't be. I don't own it. I didn't buy it. Nothing. Just wish I had a time machine. Also, if I had a time machine, I'd probably go back in time and find that Credit Suisse background. Right? It's close enough. It kind of B of A-ish, you know, without the cartoon, which I guess would be me. But thank you guys for trusting me every day of your life by liking, subscribing, trying out like to get some more stuff in your brain so you know, hey, I could make my digits go up and I can make them go down. But I have found over time, if you do nothing, your digits go down. But the choice is yours, and I will see you tomorrow.